We all know someone like this. A doctor, an engineer, or accountant who aced every exam, pulls down a heavy six-figure salary, and yet lives in a constant state of financial panic, buried under an avalanche of bills. They check their bank balances with dread. But the root of their anxiety has nothing to do with their work ethic or the size of their paycheck. They are suffering from a massive systemic blind spot in what they were taught. We spend well over a decade in classrooms exactly like this one. We memorize geometry formulas, study historical dates, and learn how to write a professional resume. But we graduate without a single practical lesson on how to manage the money we will spend the rest of our lives earning. The entire system is engineered to produce highly competent employees. You are thoroughly trained in how to trade your time for a paycheck. You are never taught the mechanics of making that paycheck work for you. Without those mechanics, you step onto a treadmill. You earn a salary, pay taxes, cover your mortgage, and exhaust yourself waiting for Friday. When a raise finally comes, your spending creeps up right alongside it to match. It is an endless, exhausting loop. To step off that treadmill, you have to master the foundational lesson of money completely omitted from your grade school syllabus. Escaping this cycle does not require an advanced degree in economics or a wall of stock trading monitors. Getting ahead comes down to a single rule. You have to learn how to read the story of your cash flow. This diagram shows the basic financial scorecard. On the top, we have an income statement, tracking money coming in and expenses going out. Below it is the balance sheet, divided simply into assets and liabilities. We can throw away the dense accounting textbook definitions. An asset is simply something that puts money into your pocket. If you stop working tomorrow, the cash from this box flows straight up into your income. A liability is the exact opposite. It is anything that takes money out of your pocket. It pulls cash from your balance sheet and pushes it directly into your expenses. This is exactly where the middle class gets trapped. A highly educated professional secures a promotion, earns a higher salary, and immediately buys a larger home or a brand new car. Because banks allow it, they proudly list these purchases in their asset column. But follow the actual cash flow of that dream home. Every single month, it demands property taxes, a mortgage payment, insurance, and maintenance. The money is flowing out. People spend decades working grueling hours to acquire things they firmly believe are assets, when the cash flow proves they are loading up on liabilities. The wealthy apply their money entirely differently. Instead of expanding their lifestyle with every pay bump, they channel their excess cash exclusively into acquiring things that pay them back. They buy rental properties, accumulate dividend-paying stocks and bonds, or build steady, royalty-generating intellectual property. This diagram shows the cash flow pattern of the rich. Their asset column is built up so deep that the passive income it generates flows up and covers all of their monthly expenses. Their physical labor and the traditional salary that comes with it becomes completely optional. You reach true financial independence the exact moment the cash flow generated by your assets exceeds the cost of your standard of living. The inventor and theorist Buckminster Fuller proposed a brilliant, brutally honest way to measure this independence. He argued that wealth is not your net worth, and it is certainly not your salary. Wealth is measured in time. If you stopped working today, exactly how many days forward could you survive on the cash flowing from your assets alone? If your answer is 0, you are caught in the loop. You work from 9 to 5 to enrich the company's owners. You work from January to May just to pay the government and taxes. And you spend the rest of the year working for the bank that holds your mortgage. Ray Kroc, the man who built the McDonald's empire, understood this deeply. He famously told a group of business students that his primary focus was acquiring the highly valuable real estate underneath every single franchise. The hamburgers simply paid for the land. Kroc was practicing a principle called minding your own business. You can keep your day job and be an excellent employee, but you must aggressively funnel your remaining capital and effort into building up your own asset column. No school is going to hand you this curriculum. It is entirely up to you to master the mechanics of cash flow at home and to teach the next generation how to make their money work for them.